I will briefly present the asset structure analysis components of Pharma Niaga Berhad and Duo Pharma. Based on our analysis, Duo Pharma demonstrates stronger liquidity due to its higher cash holding, while Pharma Niaga required a higher inventory level, indicating greater inventory risk. In terms of the total asset, Pharma Niaga increased from 1.85 billion in 2022 to 1.99 billion in 2024, showing steady growth over the 3-year period.
Okay, for statement of profit or loss analysis, Pharma Niaga recorded loss in 2022 and 2023 before recovering in 2024. In contrast, Duo Pharma achieved steady revenue growth and maintained profitability throughout the period, demonstrating strong financial stability and more sustainable business performance than Pharma Niaga.
First, I will present the corporate governance quality analysis. Both Pharma Niaga and Duo Pharma demonstrate good corporate governance practice. However, Duo Pharma shows stronger governance quality with a higher percentage of independent non-executive directors, greater diversity with 4 female directors, and fully independent audit committee. On the other hand, Pharma Niaga also maintains a good governance standards with an independent audit committee, a qualified financial expert, and clear separation between the chairman and audit committee roles.
This part compares the efficiency ratio of Pharma Niaga and Duo Pharma from 2022 to 2024. Overall, Pharma Niaga performed better with higher receivable and inventory turnover. The company also requires fewer days to collect receivable and sell inventory. This indicates stronger working capital management and better operational efficiency compared to Duo Pharma.
For our Duo analysis, we compare the stable Duo Pharma with the PN17 listed Pharma Niaga. For net profit margin, Duo Pharma maintained consistent profitability, keeping RM7 to RM10 per RM100 of sales. Meanwhile, Pharma Niaga showed a clear recovery trend, turning a massive 2022 loss into a 3.56% profit by 2024. For efficiency and leverage, Pharma Niaga reached a higher asset turnover of 1.92 times, whereas Duo Pharma remained stable at 0.60 times. However, Pharma Niaga's volatile equity multiplier highlights the high financial risk associated with its distress. Lastly, ROE, Duo Pharma delivered steady shareholder returns between 7% and 11%. In contrast, Pharma Niaga experienced extreme volatility, swinging 497% loss to a 25% gain as part of its restructuring.
Next, I will present our financial forecasting and disclosure analysis for Pharma Niaga's Berhad and Duo Pharma Biotis Berhad. Based on historical trends from 2022 to 2024, Pharma Niaga's revenue is forecast to increase from RM3.76 billion to RM3.79 billion in 2025, while Duo Pharma's revenue is expected to grow from RM0.81 billion to RM0.88 billion. For the projected financial position, Pharma Niaga is expected to record total assets of RM2.007 billion and total liabilities of RM2.09 billion, resulting in a negative equity of 0.02 billion. In contrast, Duo Pharma is projected to maintain its stronger position with total asset of RM0.41 billion, liabilities of 0.88 billion, and positive equity of 0.73 billion.
For MFRS 8, Pharma Niaga complies with the standard by disclosing its operating segment and providing relevant segment information such as revenue, profit or loss, and asset.
Okay, for operating segment for Duo Pharma complies with MFRS 8 by disclosing operating segment, revenue and performance information. This disclosure improves transparency and helps shareholder evaluate each segment's contribution effectively.
Next is the disclosure index. Based on our analysis, both companies fully comply with the disclosure requirements under MFRS 8 operating segments and MFRS 121 foreign operation. They disclose all key information including operating segments, segment revenue, profit or loss, segment assets, geographical information, multi-customer, as well as foreign currency and exchange difference.
As shown in this table, Duo Pharma demonstrates full transparency in its reporting. The company clearly discloses all mandatory aspects, including their functional currency and the basis for its determination, the recognition of foreign exchange gains or losses in their profit or loss statement, the movement in translation reserve, and the impact of foreign subsidiaries. Finally, they provide clear details on the exchange rate used and their significant exposure to foreign currency risk.
This part also presents the MFRS 121 content analysis for Pharma Niaga and Duo Pharma. Both companies disclose information on foreign operation and on foreign currency reporting in their annual reports. They also reported exchange differences and apply appropriate currency translation method. Overall, both companies demonstrated compliance with the requirements of MFRS 121.
From our disclosure analysis, both companies comply with MFRS Act and MFRS 121 requirements. However, Duo Pharma provides clear segment reporting and more comprehensive disclosures, demonstrating a high level of transparency. In conclusion, Duo Pharma shows stronger financial performance, healthy equity, low financial risks, and better disclosure equality. Although Pharma Niaga has shown signs of recovery, further improvement are needed to achieve long-term financial sustainability. Thank you.